Once again, congratulations to every single SoFi shareholder out there. This week was utterly epic, and yesterday SoFi ended up touching, or I should say breaking $20. We didn't close at $20 yesterday, obviously. We ended up closing at $19.43. But the big thing about it is that we broke above 20 bucks. And a couple months ago, when SoFi was very much crashing below $20, a lot of people on YouTube, a lot of people on social media pretty much gave up hope on SoFi. What? Oh boy, I got some morning burpees, by the way. Welcome if you are new. We keep things real here. If you choose to subscribe to my YouTube channel, I am not the devil, even though my public YouTube profile has 666 in it. Oh man, I honestly can't wait until a day and a half when when the market opens 8 p.m. Eastern Standard Time on Sunday, because hopefully this number can be obliterated. Very much profile of the devil here, but this coming week is going to be very epic, and it's going to be all eyes on deck with the Trump administration, with the Middle East. It's also going to be all eyes on deck pretty much for oil, and then a lot of economical concerns are kind of really dying down a little bit. I don't really want to dive too much into that because I talked a lot about that yesterday. But once again, congratulations to every single SoFi long-term shareholder like myself. When SoFi was crashing below 20 bucks, this guy that you're listening to, watching on YouTube, was buying shares. And I have increased my position on SoFi on this profile drastically. And I have no regrets. To be honest, I probably should have done some heavy buying around like $15. Probably should have, right? But a couple months, actually not a couple months ago, I can't believe I'm going to be saying this, 5-6 months ago, it literally feels like yesterday, 5-6 months ago, SoFi on this profile was up over 100%. And I got some nasty comments on YouTube a couple months ago saying I should have sold out my SoFi position. Well, one, I'm not God. I can't predict the future, but what I can do is not be a pussy and basically just continue to buy shares when the stock pretty much goes down to Chinatown. A lot of people sold out. And if you're one of those people out there, take it as a lesson. I've been in the market for a while now, and I've been around the block for very much different kind of games. Different kind of games where Wall Street will send stocks down on purpose, and where Wall Street will prop stocks up also on purpose too. You got to remember, Wall Street in a snap of a finger can send a stock down. And in the snap of a finger, Wall Street can send a stock up. Nvidia, Palantir, so many others, right? It's pretty utterly humorous. Water cheers, by the way. If you do want to subscribe, understand this YouTube channel is still relatively new. I've not advertised this YouTube channel across my ecosystem of other YouTube channels. So anyone that you pretty much see commenting on these videos are stock loving gurus. If you do watch me on a daily basis, we're probably going to be getting some newer people over on this channel probably in the next couple weeks, because that's probably when I'm going to be advertising this channel among my other YouTube accounts. One of my YouTube accounts is over 200,000 subscribers. Non-stock related, very video gaming related. Pretty funny, right? But then again, the stock market is just one big video game entirely. And here is a video game that I'm currently doing in the stock market. So, one thing that I'm doing for education purposes here on YouTube is I'm doing a fun little challenge, taking this profile to 6 figs in the course of 17 months. The challenge officially started 2 January of this year. So the challenge is going all the way up until May of next year, I believe, May or June. I do have certain rules, such as how much money I'm allowed to deposit over a given amount of time. And pretty much I got around $5,000 left to deposit. Whether I do that on a monthly basis or spread it out is totally just pretty much my mood. The last several months, I've been funneling in a lot into this account because, well, the market's been going down to Chinatown. This account is pure cash, not nothing's on margin. And like I said, it's a fun challenge because you can take a couple take away the dollar amount. You can take a couple 3 and turn it into 4 figs. You can take 4 figs, turn it into 5 figs. You can take 5 figs, turn it into 6. You can take 6, turn it into multiple 6, life-changing money. Or you can take 6 and turn it into 7. Once again, life-changing money. And if you're someone out there with a big wad of cash, understand that there are millionaires that lose money because they don't understand what a drawdown is. They get too hard up on the news that everything is going to go to zero, pretty much like mainstream media pretty much said with the Iran war, that hopefully is dying down, and I really honestly hope it does. I really feel America pretty much, or the world, probably needs like a couple 100 years of straight peace. that would be pretty cool. But I mean, hey, who knows what can happen? But it looks like this is going to be pretty much over with relatively quick. So today's topic, I really want to talk about 2 stocks that I could very well be potentially starting positions in. Because I might actually be making some changes on this profile. And one of the changes that I have made is actually with Meta. I actually had a Meta position close to $6,000 several months ago. And then Meta pretty much came out with their earnings, and it shocked myself along with Wall Street. Everyone really knew that their capital expenditures spending on data chips was going to be massive, but it really pushed it really far. Amazon came out with a 200 bill. Google came out with 180 bill. And a lot of people that understand fundamental analysis understand that these companies are going to be really taking on, not necessarily debt per se, but they're going to have to really be factoring in that all this spending that they're doing, it's going to affect their balance sheet in the very near future. And the reason why these companies are really spending all this money is because they believe it's going to accelerate their revenue growth rate. However, a lot of people are really looking at it and being like, hey, what if your revenue doesn't accelerate and your balance sheet and your cash flow starts to really shrink? And the opposite pretty much happens. There's always a risk. So I've really descaled Meta here. And I've sold a couple shares over the last couple months. I've rolled that money into SoFi. I think I got a couple AMD shares too. I rolled it into SoFi, into Hood, into Adobe. And we see Meta's earnings, which is going to be coming out relatively soon, which for me, it's going to be very much all eyes on Meta's earnings here. And Meta's earnings is going to be coming out after Hood, after SoFi, and Meta is pretty much the third in line for my stocks on this profile here. And the thing about Hood and SoFi going before, that's actually really good. Because if Robinhood falls back off a cliff, and by the way, a couple weeks ago, Robinhood on this profile was actually down by 20-something%. Oh man, crazy how much they can move, right? I may not buy, or rather, let me say this. If Robinhood does completely go back into the $70 range, I'm going to be a buyer. SoFi, if they plummet into the $17, oh, absolutely. But SoFi, I got to really talk about once we get closer. My 2 cents on SoFi, because I've been an investor in SoFi since February of 2024. We're going to have a rally into earnings, then we're going to sell off after earnings. That's just what the stock does. I'm not a bear. That's just what the stock does. You basically have all this FOMO before you go up on all the moving averages. You go into oversold territory, and then the stock pulls back, and then you have what is called a delayed reaction, or rather a delayed rally. So SoFi is probably going to very much sell off a week after earnings, and then probably maybe around like middle of May, we could very well have a nice early summer SoFi rally. That's personally what I really believe. What am I doing? Well, as a disciplined investor, I'm just going to be buying discounted shares if SoFi really does get back in 17 bucks. But anyways, Oracle was actually a fairly new position for me. And man, this stock is just flying. So I'm actually looking at other positions to really, potentially get into. And I want to talk about two really loyal, retail, stocks. The first is really Hims. And I've never been in Hims before, but I have followed Hims. And I've actually chose other stocks beside Hims, believe it or not. Hims went on just a very much tear during last year, 2025. Primarily February, utterly just exploded. Now, Hims has a lot of negative sentiment around their stock, and Hims obviously got sent down into dumpster fire territory with Liberation Day, but they very much soared after Liberation Day. And they've been just going on a volatile cycle. It kind of really reminds me of Tesla in a way. Tesla throughout 2022, all the way up until current days too. I never got into Tesla pretty much like before 2022. But I mean, if you look at Tesla on the charts, like Tesla was just all over the place. Tesla had these massive volatile swings. And one of the reasons being is because of retail. Believe it or not, like retail is still very much like in Tesla, and the retail community is very loyal to Tesla. Now, with Hims, I don't really want to so much dive into fundamental analysis into this video, but the big main thing around Hims is really just the negative sentiment. They're faced with a lot of lawsuits here, and the whole reason why Hims pretty much went on Epic One is because of the GLPs, basically the like weight loss, like therapy, drug therapy. I do actually talk about nutrition a little bit on this channel. I am very much all for real food. I'm all about low carb, ketogenic diets, which utterly mimic GLP-1s. But I mean, hey, you don't want to eat real food, you want to put in the time and effort. Sure, you can definitely potentially take a shot if you want to do that. Me personally, I'd very much rather dabble into real food and exercise. But as for Hims, the retail community is actually very strong. And there is a lot of upside potential once they pretty much really squash a lot of negative sentiment. Negative sentiment around the allegations, the lawsuits. But I mean, their growth rates are utterly remarkable here. And they're actually starting to show a lot of signs of life. Very much returning to potentially, and hopefully, and by all means, I really do hope that every single stock out there, even stocks that I do not own, do extremely well. Because obviously there are people in Hims that probably bought very much in the 60s, maybe the 50s, maybe even the 40s, and it's like you're holding very much like a down stock right now, close to maybe a bag. Pretty much maybe you're a bag holder. You're holding a stock that's down maybe 50+% here. And I have been in stocks that I've been down 50, 60, 70, even 80%, you know, at certain times. I've made bad investments and I made bad trades. So I am keeping an eye on Hims primarily because of this reason, and this reason only. If we enter into a FOMO market, and I'm talking about a very FOMO-y market, because you got to remember this. FOMO, the fear of missing out, it goes both ways. The fear of missing out goes on the way down. So let's say if a stock goes, you know, a stock starts to crash, right? and the stock, goes lower and lower and lower, right? You could theoretically FOMO all in too quickly. How do you correct yourself from doing that? Well, you nibble on in. That's what I've been doing with SoFi, AMD, Adobe, Hood, Palantir, Meta, PayPal, and Oracle in the last 6 months now. You nibble on into these stocks. When a stock is crashing on down, you don't want to go ahead and just deplete all your cash allocated for that one position, whether it's for an investment or a trade. You nibble on in. Same as that thing if a stock is going up too. FOMO works in both ways. A fear of missing out to the upside and fear of missing out to the downside. A lot of people forget this. So if we do enter into a FOMO-y market to the upside, you can see very high momentum stocks like HIMS very much recover into the $40 range. I'm not saying the stock is going to go on a epic tear, although that would be crazy, right? Crazier things have happened in the market, though. Understand that. But I mean, from all-time highs, we are essentially 152%. Even if, hypothetically, let's say my strategy was to be in HIMS to maybe, let's say, in the high 40s, you're still talking about 60% to the upside. It's not bad. Now, the other stock that retail is very, very much loyal to, especially throughout 2025, is an energy drink company that I've actually been in. It's called Celsius. Celsius has a great retail community. If anything, I honestly believe that Celsius retail community is actually a little better than HIMS retail community. And you see a lot of people that are just very much loyal. They're loyal to the stock. They're loyal to the brand. And you go on Facebook, you go on YouTube. A lot of people talk about HIMS. A lot of people talk about Celsius, just like how I talk about SoFi and many other people. And with Celsius, it's a little different. Celsius obviously has so much competition out there. Unlike HIMS, they're not facing lawsuits. If anything, Celsius has actually done some acquisitions over the last several years here that are really going to be playing off. They've acquired different style of companies out there to grow their own brand. But the thing about Celsius is that they are going through pretty much a downward cycle. Downward cycle since May of 2024. Very much crashed down in last year. Pretty much rose out of the depths of hell. And now we're trading very much near levels of 2025. But the thing about Celsius is that their earnings are right around the corner. And they have a phenomenal growth rate. And they're a profitable company, just like HIMS. So these are two stocks that me personally, I'm really considering getting in. And the reason I'm talking about this is because out of these stocks on this YouTube channel profile, I very much have my positions built. I have my position built in AMD. I have my position built in SoFi. Robinhood, unless we go honestly really back down into the 70s, I got my position nice here. Adobe, if we honestly go back into the 220s, I may pick up some shares, and then that's really it for Adobe. But if I'm going to be scaling out a Meta, obviously Oracle, I did pick up some shares here, but I mean Oracle is producing just like it's on a tear right now. So other stocks that I'm really looking at, than other with very much tech stocks orientated would be very much retail loving stocks like HIMS and Celsius that are very much beaten down. So, and also another thing too, I've talked about this before, Palantir, I've been in and out of Palantir, and I am a Palantir bull. But here's the reality with Palantir. The reality with Palantir is that it's going to be harder and harder to get Palantir to break all-time highs. For me to see a double up on Palantir here, it could be utterly years. However, if I move some money out of Palantir, maybe once Palantir recovers into the 170s and 180s again, and I go ahead and place that money into very much beaten down stocks that are not yet showing signs of life, like maybe Hims or Celsius, I could be getting a bigger return than I would theoretically on Palantir. I've talked about AMD, SoFi, Hood, Adobe, and even Oracle on this channel way too much. I got plenty enough money in there. So, for me personally, I am going to be looking at Hims and Celsius. If I had to choose one to buy right now, it would probably be Celsius. And the reason being is because the allegations and the lawsuits kind of really do give me a little bit of hippity-jibbities. But understand in the next several weeks here, and I'm going to be depositing more money into this account, probably honestly next week. So understand that some stocks that I'm going to be acquiring is probably going to be very much different than the stocks up on the screen. So always do your due diligence. And oh yes, hold on one second. I actually totally forgot about this. Actually, you want to know what? Probably going to save this for a different video. I actually got 2 articles that I found from 2025. I'll definitely save it for a different video. 2 articles from 2025 that I found about Celsius and Hims. Do you know what the article said? The articles pretty much said that Hims and Celsius is theoretically like near the top retail loving stocks, pretty much in a nutshell. But 2026, the retail community is still very much around Hims and Celsius. So definitely let me know down below in some comments if you want to be a troll in any mean by necessary. Leave some nasty, dirty little comments too. But let me know on a serious note what you think about Hims or Celsius. Let me know if you would actually go ahead and open a position. Because me personally, I'm really debating. And it's not bad also because the account for this YouTube channel is very much dedicated to tech-related stocks. But taking other positions as well that are very much high momentum, very much retail loving stocks that could go on a tear when this market turns very much bull, there's definitely money to be made. All right, take it easy, everyone. I'll see you all with a new video on Monday, and later.